Today is the first part of a series that we are doing on the digital infrastructure that's being built by the Indian government. In my opinion, this digital infrastructure really began with Aadhaar in 2010, where we started getting everybody's biometrics digitized, right? And now that makes it, when you link that with your bank accounts, it makes it much easier to identify who is with what bank account. And that is eventually what led to UPI, which is the Unified Payments Interface, which led to things like Google Pay and Paytm and all of the ease of transactions that we find now. But beyond this, the government of India is planning so many other digital infrastructures, which I think is going to absolutely change our lives over the next 5 to 10 years. There are three parts of it, and we're going to talk about the first one today. Siddharth, you are the resident expert on lending. So why don't you tell us about the fintech piece of it, the Open Credit Enablement Network?
First of all, I'm going to preface the entire discussion by saying that I am proud by what the team at iSpirit, which is the volunteer organization that has been researching and developing a lot of these technologies, led by Sharat Sharma and a bunch of other volunteers who've been selflessly working on the India Stack problem. Nandan Nilekani is obviously a huge part of the India Stack. And I'm proud on how we are leaping ahead of any other country when it comes to digital infrastructure. We're going to specifically focus on the finance digital infrastructure and how, what the government is trying to solve there. And as Sahil said, we're going to be talking about the other aspects in a later episode. In order to understand what's happening in the India digital infrastructure, we need to truly understand India Stack. So India Stack has three foundational layers. There's the identity layer, which is Aadhaar as we all know it. But on the underlying, there is eKYC, eSign, which is basically, you can do a lot of these, things that used to happen manually on paper forms. Now that can be done all digitally. That has happened, started in 2010, and has been continuously evolving since then. Then the next thing that came in was the payments layer, which is UPI as we all know it. But there's also something called as Aadhaar Payments Bridge, Aadhaar Enabled Payment Service. These are again things that are used for loans and stuff like that. And the next one, which is what the government is currently working on, is data empowerment. We've laid the foundation for data empowerment with DigiLocker. So this is where you can actually store all your documents. But if you've been reading the news, there have been account aggregators has been in the news very recently. I think 2 weeks ago or 3 weeks ago, the finance minister, Mrs. Nirmala Sitharaman, came on and said that, hey, we want all the public sector banks to be on the account aggregator framework. I'm going to be covering the data empowerment side today. I'm going to be covering what all of this leads to, right? This is all stepping up to something that is very, very critical for India to solve for. What is that critical thing that we are trying to solve for? What is all of this leading to? And all of this leads to MSME Financial Inclusion. MSME stands for micro, small, medium enterprises. And we need to figure out as a country, if we want to sort of go ahead in terms of economic growth, we need to figure out how do we get all of the MSMEs in India financially included. Now, I will preface again by saying that the medium part of this, MSME, which is a very, very small percentage, I think 6 lakh or some units, they're already financially included, right? Banks give them loans, NBFCs give them loans. They're completely fine. They're more than 30-50 crores in turnover, and they're soon going to be, decently large companies. The entire focus, the entire problem is in the micro and small enterprises. Let me give you some numbers. Let me tell you. Yeah.
I just want to preface you on one thing. We've done a previous episode on MSME lending, and we were both shocked by the very small number of medium companies. It's not 6 lakhs. I think, if I remember the number correctly, it was 50,000, or it was in the tens of thousands. So it's definitely not in the lakhs of medium companies, which is, I think, revenue of more than 100 crore, 250 crore. But yeah, sorry. The point is to get the micro and small to the medium size.
Exactly. Now, there are 60 million MSMEs in the country. They contribute 31% to GDP. They employ 124 million people, and they contribute 45% to exports. Why are these numbers important? Because I'm trying to tell you the importance of these 60 million MSMEs to the economy of the country. The problem is there is a 37 trillion rupee credit demand. What that means is they need 37 trillion rupees in credit in order to grow, in order to function. And that comes out to be about $460 billion. What's being supplied, the formal credit that's being addressed to them, is 14.5 trillion rupees, right? That's the gap. So $181 billion is the supply for credit. 460 billion is the demand for credit, which basically makes the credit gap to be about $300 billion. This was done by these numbers came out of a research that was done by the UK Sinha committee back in 2019. Now these numbers have probably fallen down, not because we've met the credit demand, because the USD compared to INR is just shooting up from 70 to 80 now in just like the last 2 years. So it probably means in dollar terms the credit demand has gone down, but that's not because we've made something happen.
I don't mind getting some of those $300 billion either.
So yeah, that's a huge credit gap. Now it's not like this credit gap means that nobody's giving them loans. There is an informal sector. For the longest time in India, lending has been done through the informal sector. Hundi chitti it's one of the terms that's being used, that is used for ages now. And this is off books. A lot of times, most of it is off books. Very, very high interest rates. The interest rates could go up to 4% a day. That is insane, right? For very small ticket size loans, it can go up to 4% a day in the informal sector. But even for large ticket sizes, 1.5 to 2.5% a month is not unheard of. It's a very common term depending on the risk appetite and stuff like that. A few other numbers to sort of explain where the gap is happening. Of the overall lending market in India through banks and NBFC, it's a 15.3 lakh crore market. Of the overall market from banks and NBFCs, the money that's given out to the entire economy, 116 lakh crore is the amount of money that's given out as credit. Only 15 lakh crores of it is gone to MSMEs. So 13% of the overall credit goes to MSMEs, and they contribute 31% to the GDP. So that's also that's one way to see the mismatch that's there. Now it's important to understand, why is there a credit gap, right? First of all, everybody wants to get into the lending business. For the last few years, we've been seeing everybody wants to get into the lending business. And I'm going to take a slight detour. Most of the fintechs that want to get into the lending business, they're getting into the wrong lending business. It's the buy now, pay later. It's not the kind of lending that actually builds up the economy. It's the kind of lending that bursts an economy, right? This becomes a bubble. This has happened previously in the Western countries. If not for the RBI, who's put some checks and balances for people who know, people who are giving out, these buy now, pay later schemes as credit cards have been put a stop. Slice, Unicards, a lot of these companies have been told by RBI to not do what they were doing. That's not the kind of lending that's going to actually improve the economy. And why will that not improve the economy? Because you're not giving money to someone who's going to do productive use of that and make more money. You're giving money to someone who has short-term desires, who's, because of social media, because of a lot of these things, people want to have a certain lifestyle, and you're giving them money right now to fulfill that lifestyle, but you're going to get them in a debt trap. You're going to make a lot of interest, sure. Yeah.
It's consumption versus capital expenditure, right? Because when you're making a capital expenditure, you will be able to make money with that in the future, while with a consumption that's going to be consumed right now. For example, buying a TV, it's not going to get you money in the future. Actually, I don't think there's any way that's going to get you money in the future. But when you buy, for example, you buy a video camera, and that's a capital expenditure. It's quite expensive. And then you start making YouTube videos, and then you can make money out of it, right? So that's the difference over there. I think
exactly. So the entire discussion that we're going to talk about lending today is about a sector of lending that does not exist, and it truly needs to exist in India for us to progress as a nation. So coming back to the main point, why is there a credit gap? Everybody wants to get into lending. So why are people not getting into this kind of lending? The reason why people are not getting into this kind of lending from a banks and NBFC's perspective is because it's not cost effective, right? Think of the costs that go into actually making a loan happen. There's cost of acquisition, so you need to acquire the customer. Then there's cost of underwriting, which is you need to understand if it makes sense to give money to this customer. And then cost of servicing, which is basically collection of the EMIs and all of that. The entire cost actually is so high in the current way of doing things that if you want to give somebody a 10,000 rupee loan or a 50,000 rupee loan to an MSME, it will make no sense for you to do it, because a lot of this happens physically, shoots up the costs, and it basically makes it unviable. So that's from the banks and NBFC's perspective on why this kind of lending is not happening. Even from the MSME perspective, because it's not like the government does not understand and has been trying for ages now to say that, hey, banks and NBFCs need to lend to these MSMEs. They come up with schemes like priority sector lending, which is basically an imposition on the banks and NBFCs saying that, hey, of the 100% loans that you give out, X percentage need to be in priority sector lending, and MSME is a priority sector. It comes into the priority sector. Then there are credit guarantee schemes. If you would have heard that in COVID and in the last budget as well, where the government says that, hey, for the credit that you're giving to MSMEs, we are going to make sure that this is guaranteed, so that's not going to be bad debt, and therefore please go ahead and give these loans. But the problem obviously is these are pushes to the public sector banks. These are not long-term sustainable, right? These are policy changes that push in the short term for these organizations to give out loans. But if you want to truly make it into a large industry, it needs to capitalism needs to kick in, right? It needs to make sense from a financial perspective. It needs to make sense from a unit economics perspective for banks and NBFCs and fintechs to really get into it, which is what the government has been trying to solve for the last few years. And I'm going to talk about in detail what that is. The other reason why MSMEs are choosing to go to informal sector, I said 4% a day, right? That was obviously the extreme, but even 2.5-3% a month is very high interest rates. Then why are MSMEs going to these informal sectors? Because they have no other option. They need speed, they need reliability, and they need flexibility. These three things are extremely important. They need money today. They can't, go through the process of, going to a Punjab National Bank or an SBI, submit all the documents, then figure out if you're going to get the loan or not. And even if you get that loan, it's not going to be flexible. What I mean by that, a lot of these MSMEs need money for, let's say, 15 days. They need money for 20 days. They need money for 2 months. What is the bank offering you? You have to take a three-year loan. You have to take a 4-year loan. You have to take a 5-year loan, right? They don't need the money for 5 years. They need it for short-term working capital needs and reliability. Even after submitting all the documents, even after submitting everything, if it's not reliable that I will get the loan or not get the loan, it will depend on the loan officer and whatever. Then it makes no sense for the MSMEs to actually go through this process of getting the loan. And all these criteria, by the way, go to any informal sector lender. They will give you a loan the same day. They will give you a flexibility saying that if you want to pay back in 15 days, I will only charge you interest for 15 days. And if you've taken loan from them once, chances are you're going to be very reliably get loan from them whenever you want it, as long as your credit is decent. And by credit in the informal sector, it's not the bureau reports or anything. It's the market, reputation that you have in that small market. If that's all of that is good, you're going to get money reliably. Yeah.
The question I have is that you said that Punjab National Bank, for example, won't give them the working capital loans, but they do give working capital loans, right? You have your PC limits and all that stuff. So what is different between that and what you're talking about in the informal sector?
So the product definitely exists, but the product is catered to people who want 1 crore in working capital, 2 crores in working capital, right? Have a collateral to give out. A lot of these banks, for that matter, want collateral. But the MSMEs that we are talking about, of 60 million, nobody has collateral to give. These could be, vegetable vendors. These could be electrical service providers. These could be plumbing service providers. These could be multiple, kinds of businesses that don't have any collateral to give out, and which is where the banks are just going to outright reject them. Because as I said, it's not like they don't want to give them loans, or it's not like they think this is not a lucrative sector. Just the cost of it does not make sense, because the ticket size these people are going to be asking for is going to be significantly lower than the ticket size it makes sense for the banks and NBFCs to give out loans. Now, there have been a lot of... Sorry, yeah.
So in the formal sector, usually the collateral that banks ask for are FDs. They say, okay, you want 5 crores of a working capital limit. Yeah, give me maybe 2.5 crores of FDs.
Or give me land, right? Or your house or your factory land or your office land or whatnot. But that's not a luxury that a lot of MSMEs have. Yeah.
One funny thing is recently next to my house in Lonavala, a piece of land was transferred to somebody else, and the rumor that I heard was that it was a loan shark that took over that land because the person was not able to pay back whatever loan that he took from that loan shark.
Exactly. I'm not saying the informal sector is completely, unsecured. There is obviously some security that goes into that as well. But there are technical terms where if the land is not properly titled, or if it has some confusion, the banks are going to reject it. But the money lender is going to say, yeah, I'll happily take it because I have the muscle power to repossess the land if it ever comes to that, right? So there are multiple reasons why MSMEs go to informal sector and take the high credit, the high interest loans. The underlying thing there is necessity, right? They need the money to function and to keep the business afloat. And apart from I've tried to explain it from both sides why the informal sector is still a big industry in India. Even from a formal sector perspective, even let's say if the cost makes sense, sometimes there is just lack of proper data, right? They are not able to get the proper data to underwrite the loan, and hence they are not able to decide if they should be giving out the loan or not. Now, what's happening in the India stack, in the data empowerment stack, which is the final piece of the puzzle for us to truly build something called as the Open Credit Enablement Network. It's called OCEN, OCEN, but pronounced as OKEN. And for that to happen, one of the things that needs to happen is account aggregator framework that's been put in place. Why is that important? Let me get to that in a second. There is identity that's not sorted, right? You can figure out through Aadhaar which person, and you're not going to, the chances of fraud there have significantly reduced because of eKYC and eSign. So the identity layer is sorted. There's payments layers that is sorted. Now, it's important to understand why payment layer being sorted through UPI was extremely important. If you were to give money through debit card or charge money through debit card when it comes to the loan processing of the loan, if you're going to be giving 1% both ways, which is what the debit card companies charge, and if that loan is for 10 days, right, you've charged 2% extra just because you had to go through the debit card rails to actually get the money to the person and take the money out back from the person, right? So again, economically not viable. So even if you recreate this entire thing without UPI, it's not going to make sense. So the payment layer is now sorted because it's now free to transfer money and take back money. The identity layer is now sorted. Now comes the data, which is the missing puzzle in trying to figure out if you can give these loans at a low ticket size or not, which is where account aggregator comes in. What are account aggregators? Now, think of any individual, any business will have a lot of data points, right? They have their bank statements, they have their insurance, they have their maybe investments, they have their GST returns, they have their invoices. And now all of this technically exists in different systems, right? And this is all going back to the India digital stack, India digital infrastructure that's been happening, right? GST is now digitized. Banks are now, you can pull out statements digitally. The insurance policies, everything is now digitized. So it's been in the works for decade or more to come to this point, and which is why I'm so excited, because now the final piece of puzzle is happening. So you have all these data points that are there, and these need to be given in a cost-effective way to the person who's going to be evaluating this data and deciding if you're credit worthy or not, if you should be given a loan or not. In the traditional world, and when I say traditional world, it is like literally a year back, right? Even today, for that matter, a lot of this documentation had to be done in physical papers. I've worked at a lending company. For those of you who know, I've worked at two lending companies. I've worked at an affordable housing finance company, and I've worked at an SME lending company. And at both places, I've seen the amount of paper that needs to be printed out for different kinds of documents and different kinds of form for a loan to be passed. It can go up to 150 to 200 pieces of paper. There are dedicated teams of 30-40 people that are just looking at these papers and making sure these papers are right and digitizing these papers, right? So that's a lot of cost going into just making use of this paper-based documents and making sense of those. With account aggregator, the entire thing can be digitized. What are account aggregators? Just like UPI, they're going to be apps, and they're going to be people who are going to get NBFC account aggregator licenses. These are the people who will be building apps where you log on to an app. And I've tried this app, by the way. This is not something in the future or something that's going to happen 5-10 years down the line. It's happening today as we speak. SBI, Punjab National Bank, a lot of large private banks are already on the account aggregator framework. What does that mean? You log on to an app, you put your phone number. Your phone number is linked to pretty much everything now. And it automatically gives you all your financial instruments. And you can say, hey, I want to click. I want to bring all of these into the account aggregator. Account aggregator, by the way, cannot read your data. They can just pull this information, keep it in that account aggregator app, and whenever somebody asks for this information, so a financial information user, so a bank that you're applying to will say that, hey, I need all of these documents. You can go to the app, click on all the documents that needed, and provide consent to HDFC, for example, if that's the bank that you're taking the loan from, and say that, hey, I want to give consent to HDFC to access all of this data for the next 30 days, right? Imagine how simple it is. Everything is digitized. There is not a single piece of paper being printed. In the ideal world, I know in the interim, there's going to be still some documents printed, but it's a transition that we are making to that, idealistic digital world, which is you go in and you say that, hey, I want to give all this information to HDFC for the next 2 months, and they will have access to it. They can monitor it. They can do whatever. They might give the loan in 10 days, but they might still need access to make sure, it's not that the money is not being misused. And all of this can happen digitally. We now have, from a numbers perspective, 8 lakh accounts on the account aggregator apps already, and 7 lakh consents have already been done since September 2021. That's when the account aggregator framework went live, and this is with barely any institution that's already, there were 8 banks that started, and there are, I think, 40 or 50 institutions that are on the account aggregator framework. This number is going to swell to hundreds within the next year, with SBI coming in this month, Punjab National Bank coming in by the end of the month, Bank of Maharashtra, Sindh Bank, Indian Overseas Bank, all of them are slated to come onto the account aggregator framework by the end of the month. This is the final piece of the puzzle before the OCEN utopia, right? Any questions, Sahil?
OCEN utopia, I like that. So what you're basically saying is that what OCEN is providing is a place for small companies, small people to go and say, hey, I need this much money. It could be for working capital. It could be for a long-term loan. They'll put it up there, and different banks or NBFCs will bid for that loan. And then in the end, they can say, hey, I want to go with HDFC. Hey, I want to go with this person. I want to go with this person. My question to you is that this sounds exactly like the job of a syndicator. What will happen to a loan syndicator after this?
Exactly, right? So the most common question asked is, there are private marketplaces that are already doing stuff like that, right? Policy Bazaar or Bank Bazaar or Paisa Bazaar for that matter are in the business of being a marketplace for credit products. So all the credit products are listed there. People can go in and say that I want this much loan, and therefore this is already being solved by the private players. No, there is a huge problem. The problem is it takes ages to get loans from them. Why does it take ages to get loans from them? Not because they are a government company that doesn't want to be efficient, but because they cannot be efficient. Why can't they be efficient? Because if you have to do custom integrations with every single bank that's out there, right? Everybody has different, data infrastructure. Everybody has different API infrastructure. And if you have to connect to every bank to digitize the entire loan process, which is the only way you can have a, low turnaround time, it's impossible. Nobody's going to be able to invest that kind of time, money, and able to pull off that complexity very easily, right? So that's one of the reasons why private marketplaces are glorified call centers, which is basically you get on a call with someone, they will tell you, hey, send me all these documents, and they then send it to the bank, and they become the middleman or the syndicators or digital sourcing agent or direct sourcing agent, whatever you call it. This entire industry is going to change, and I'll get to how that's going to change, right? The other problem with this is you are still taking the traditional products and trying to match the MSME sector with that. One of the things that we've understood why the informal sector works is because the flexibility of products, the sachet-sized loans, right? The whole thing about why shampoos in sachets became a huge thing is because people want small ticket size loans. People don't want those 50,000 loans, or 50,000 probably is still a small number, but people don't want loans. MSMEs don't want loans in lakhs. They want some small ticket size loans for a few days. And those products truly don't exist. They don't exist because it's not economically viable to make those things exist. So what is OCEN doing? It is a marketplace at the end of the day. It is exactly what you described, which is, hey, I am somebody, an MSME that wants XYZ loans against an invoice or against a purchase order. I go onto this platform. I let account aggregator do its magic, and all the data is provided. And I want multiple banks to offer a loan to me, right? This process is not going to happen without the digital infrastructure, and this is where the magic happens. What OCEN has done is the entire process of loan origination to loan management to loan closure, everything is now an API. Every single thing is an API, right? So everybody is now on standard infrastructure. There is one kind of infrastructure, just like UPI. UPI is one infrastructure that existed on all traditional systems, worked with all kinds of banks, worked with everything. OCEN is that infrastructure. OCEN is not a marketplace that you go to, right? OCEN is not OCEN.org and you can go and apply for a loan. OCEN is the set of standard digital infrastructure in APIs, right from collection of data, right from origination, right from going to offering the loan, closure of loans, paying back the loans. Everything is now an API.
Okay, so if I understand what you're saying, is how this is going to be better than syndicators, and also why syndicators, I guess, going to die. I don't know, but is that since everything is on an API, you can build the front end to this. So basically, like how UPI is the back end, and Google Pay is built on top of UPI, Paytm is built on top of UPI, Bheem is built on top of UPI, all of that stuff, right? So OCEN is the back end, and somebody is going to build the front end for that. So for example, you were saying Paisa Bazaar or whatever, Bank Bazaar, they could build on top of OCEN, and their business will not die, but their business in fact will get much bigger, just like UPI made GPay bigger, it made Paytm bigger, etc.
Absolutely.
But the face-to-face syndicators will still face an existential threat.